Welcome back to our Pintar Uang campaign, a FinLab podcast series.
Hi everyone, welcome to the podcast. I'm Adi and I'm with my amazing co-host.
Hi, I'm Michelle.
I'm Kira, and we have Kaylin as the cameraman.
Today's episode is going to be very good. We have a special guest here and we're diving into venture capitalists. You've probably heard of it from shows as Shark Tank. Do you know Shark Tank?
Of course, it's a very popular show.
But what is actually venture capital? We're also joined with a very special guest. Would you mind introducing yourself?
Sure. Thanks for having me. My name is David Wagasback. I'm an associate professor at the Robert H. Smith School of Business at the University of Maryland in the USA. Yeah.
Could you please tell us a little bit about USA and the University of Maryland?
Sure. The University of Maryland is on the east coast of the United States, so very close to Washington, D.C. In fact, from our campus to the White House and the Capitol is about 10 kilometers. So for most people, it's actually Washington, D.C. The University of Maryland is a large public school. It's what we call a flagship state school. We have about 45,000 students, and I teach at the business school. I teach classes in strategy and in data analytics at all levels, all the way from undergraduates up to PhD students. And I have a research interest in Indonesia, and so it's great to be in Jakarta talking to you all.
Yeah, that's
good. Close to the White House, so meeting president?
Well, no, but occasionally you do see the helicopters flying overhead, and I have had friends who have worked in the White House.
Oh, that's great.
So yes, yeah, not far.
Okay, now let's start off with the venture capital topic. For the listeners who might be new to this field, could you please explain a little bit about what venture capital is and how it all comes down together?
Sure. Venture capital is a special kind of investing. All right. So a venture capital firm is a special kind of bank, if you will. And so what a venture capitalist does is they collect money from what are called limited partners, and those are usually things like a pension fund, a university, it could be a government, it could be wealthy individuals. And then the venture capitalists will invest that money in startup companies. And so they give startup companies money and they take an ownership stake in that investment, and they also provide them with advice on how to run their business, access to customers, access to potential partners, and so forth. And it's a very risky form of investing because most startup companies do not succeed, probably less than 1 in 10. But when the venture capitalists make a portfolio of investments, they'll invest in 30, 50, 70 companies. 1 or 2 of those, if they succeed, they make very big profits on them, and that's what they need. So they're looking for very big successes, and so very well-known companies, Gojek, Google, Facebook, Intel, Apple, all examples of venture-funded companies that then went on to become publicly listed and very large.
Okay, so it's high risk but also high return, yeah?
High risk, high reward.
Very high risk, yeah. To do this kind of investing, you need experience, you need an appetite for risk, and you need money. Yeah.
For sure.
Yeah.
So what drew you into the world of venture capital?
I am not a venture capitalist. I don't have much of an appetite for risk, and I also don't have money. But I'm a scholar who studies it because as a scholar at a business school, this is an important phenomenon in our society and economy in the U.S. And so estimates are that publicly traded companies, so these are the very large companies that we know most about, more than half were funded by venture capital, and it has a very interesting history. And part of what brings me to Indonesia is a form of investing, an industry that's starting to emerge here in greater scale. Yeah.
So you said you're a scholar.
Yes.
What are like the benefits of venture capitals, and like what are the, like the risks of it?
So I can tell you why governments want it. All right. So the governments will look at this as a driver of economic activity. So venture capital is not geared towards people who want to have a small company. It's geared towards a company that has the potential of growing very large and having a lot of employment and a lot of sales, all of which are good for the tax base for the government and good for the economy. So that's what drives them. I think as an individual, if you're thinking about becoming either an entrepreneur in a high growth setting, right, where you might receive venture capital, or an investor yourself, it can be very exciting, right? It can be, there's the potential to get very wealthy and do very well. But I would say more than anything, you probably need to have a willingness or an appetite for risk, because there are many good ideas that don't succeed, right? And they remain good ideas for sure. And I think in some way, for those of you that are thinking about becoming an entrepreneur in a startup, it's fine. It's actually a good way. You'll learn a lot of things, even if the company doesn't succeed. You'll learn skills. You'll get experiences that you can carry to other jobs.
Yeah, that's true.
What makes startup attractive to venture capitalists?
It's the potential for very large growth. So that it's not that a company that would say have 100 employees, it's thousands or tens of thousands and billions of dollars in sales. And so what they're looking for, as far as I understand it, are ideas that are good. So they come to the market having identified a problem or a gap in the market. Ideally, maybe identifying a solution that they can sell, and a solution that they can protect, right? So something that makes them uniquely positioned to go and do well and grow very, very large, right? So again, most startups do not succeed, right? But then we do have cases like Google, and one of the Google co-founders went to the University of Maryland, by the way. His father was a math professor there as an undergrad. That's the idea. That's what makes it worthwhile for them, the investors, to say, okay, if I get one Google, then 40 failures is fine, right? It's a good bit, but they don't know. Okay, they're candid. They understand that they're taking on risk, that they can identify promising ideas and people that work hard still may not work, right? So they spread out their bet. They make a lot of bets. Some of them work, hopefully. Yeah.
Well, then how do the investors know which one to invest in? Or like, not even like venture capital, like what is a good business to invest in? Maybe like their income statements or something like that? Like how do you detect the fraudulent activities, maybe?
Boy, that's a good question. So they do their due diligence, right? So they would inspect these companies as they're evaluating their investments. So, but the nature of the risk means they can't answer your questions very well. Okay, so these will sometimes be companies that don't actually have revenue. They don't have customers. They have an idea, and they need money to develop that idea, and part of what the venture capitalists try to then offer as well is, okay, let's try to help you develop. Let's try to help you find customers. Let's try to help you find other investors. Let's try to help you find partners to bring the idea forward, right? But this is not, these are very high risk ideas, which as a consequence, you don't have good metrics. And so It's hard to say from the outside how they make their decisions. I can tell you what they say. And you can read very interesting stories, and I encourage you to do so in the papers here about cases where it works. Just keep in mind, they could not predict ahead of time which ones would succeed. Otherwise, they wouldn't have made the 45 investments that failed. Right? Yeah.
With what's going on with like there's tariff and trade wars, will there be effect on venture capital, do you think?
Yes. Yes, and I don't know. I don't know what the effect is. So the first effect will be whenever we're in an environment where there is uncertainty about the future, investment tends to drop.
That's true.
Okay.
Tends to be scared investors.
It's not scared. It's not knowing what's going to happen, good or bad.
Oh.
Okay. So the worst investment climate may be an uncertain climate, not a bad climate. Because if I don't know what's going to happen, I don't know what the right strategy is. And so I think the first thing that we'll see is investors holding on to more money right now. Beyond that, I think the nature of these companies could possibly be a little different. So if venture capitalists are trying to invest in companies that grow very, very big, one of the ways you do that is becoming multinational.